Now continue our ongoing updates on today's expected interest rates decision, which is set for 3 p.m. this afternoon. Now we plan to bring you that event as soon as it begins, but it probably will be when Stephen Grootes takes over. But for now, joining us to discuss the factors that would influence that decision is WesBank's head of communication, Mr. Lebo Gaoaketse. A very good afternoon to you, Mr. Gaoaketse. Good to have you with us once again on the daytime update. Now tell us about the general expectations for today. A large number of analysts saying that it is likely to remain unchanged. Which direction are you leaning in?
Well, thank you firstly for having me, Tammy, and good day to the viewers at home. And to be quite honest with you, I think the most prudent thing that will happen this afternoon is for the rate to remain unchanged. So we anticipate that there will be no changes based on where we are macroeconomically. I mean, we all know what happened a few months back in terms of the looting and many other macroeconomic variables in terms of unemployment rates going up. I mean, the CPI figures went out yesterday as well. So to answer your question, the prudent thing is to really keep it where it is at 7%.
Have the lower rates necessarily translated into more money in people's pockets?
Tammy, to be honest with you, while there is a difference to consumers' pocket because of the decreased rates, it's really marginal because when they do decrease, it's by a percentile, a quarter of a percentage at most. If you look at where they were post-COVID in January 2020 at 10%, they are now at, or it's now at 7%, and it's been at this 7% for over a year now. I think the bigger discussion is really around the vehicle price index when it comes to affordability. And that's where consumers will be knocked because vehicle prices are increasing, both for new and used cars. I mean, those figures have just doubled in terms of the increase, and I think that's where the consumer will feel the pinch more than a decreased or a stabilized interest rate.
So talk to us then about the escalation in new as well as used vehicles in relation to inflation.
If you look at the new, for example, it was sitting at, and this is last year, around about July, August, in terms of vehicle price index, it was sitting at 4%, and now it's sitting at about 8.8%. This is now for the new, and then the used was sitting at 1.4%, which is now 3.7%. So what that means is that when a consumer is trying to get a new car, they will pay a bit more than they did last year, firstly, which then has a negative impact despite what happens to the interest, because you are paying far more than you would have even though the interest would go down or in this case has stabilized.
Ultimately, we know that the moment you drive your car outside of the dealership, its value decreases at an alarming rate. You've spoken now about the increasing and escalating prices of new cars. How are resold second-hand cars comparing in their price increases? Does one then maybe get to recoup some of the expenses on the tail end, on the resale end, or is it a lose-lose all round?
To be honest, Tabby, they are moving at as I said earlier, in terms of the vehicle price index, it has also increased for used cars. What we are seeing, though, is that, there's a shift towards used cars. So people are firstly buying more used or second-hand cars as they trade in their cars or trade down, firstly. And then secondly, it's much of a muchness in terms of value and pocket. As you rightly said, that, a vehicle decreases in value. So in terms of used cars, yes, the vehicle price index has increased and gone up, but when you are selling your old car, it's pretty much the same. You're not really going to benefit too greatly because of where interest rates are.
Talk to us about the true cost of actually owning a vehicle. We all know it's not just about the sale price, but there's so many other ancillary costs that are associated with owning a vehicle.
Absolutely. I mean, you've rightly said it there. One has to think of many other variables. And I think right now, chief amongst those variables is the price of petrol. It's the highest it's been in years. I mean, it's currently sitting, if you look at the year-on-year figure, this is from August 2020 to August 2021, it has increased by 19.2%, Tammy. So that's one variable that one has to consider. Can you afford to pour petrol into this car that you're getting into? There's also the cost of value-added products, you know, your insurance, your motor and service plans, because those are part and parcel of owning a vehicle. Of course, as I said earlier on, added to this is the increase in just the normal price of the vehicle. And I'd really urge, you know, our customers, as I always do, to do their research. The market is stabilizing. You know, we are receiving lots of applications, so the appetite is still there. And I would say that, I mean, because the interest rate has been the lowest we've seen in 30 years, if I can put it that way. So the only way that if the Monetary Policy Committee does not stabilize it, the next shot it will definitely go up. So it is definitely a good time to, you know, to get a car, because we will, I mean, I very much doubt that we will see interest rates so low in a very long time to come. So yes, it's a good time to get a car, but research, quite important. Can you afford it? You know, because at the end of the day, you have to live with that machine in your garage that you can afford, essentially.
And also research shows that car repayments and car-associated payments tend to be some of the highest for many households. As you highlighted, it's not only the repayment of the car, there's service costs, there's fuel costs, etc. What if one finds themselves in a position now where they are really unable to afford the car? They cannot repay the garages back. What should they do?
I mean, I always say that the first point of honesty when you get there, call us, you know, speak to us, and let us know where you are in terms of your situation, because there are options. One can trade down, for example. You know, we can then get the car, resell it, and really negotiate with the customer in terms of the balance of the payment once we've sold that car to somebody else. So the best thing is to, you're obviously being honest with yourself. Get in touch with WesBank, you know, and let us talk to you through the options that you have, because at the end of the day, we want a win-win situation for both ourselves as a financier, but our customers as well. So give us a call, and then we will go through the options that one can exercise. But there has been instances where, you know, there's a win-win. There will always be ways where we can win on both ends, if I can put it that way.
And I ask you this, Mr. Lebo, because I've seen a lot of people saying that they've just left their car at the garage and they are walking back home, and a sense of relief coming in over them because they now no longer have this huge debt to repay. How does one win when they do that?
Leaving it at the garage and not paying, remember that you've got a contract. So essentially, you would still be liable to a great extent for that repayment, even though you're not driving the car. So you may leave it at the garage and walk away, but you are still liable. What we would then do, we would try to put it back into the market and auction it out. And I'm going to use a very simple example, Tammy. So if the car is worth, you owe us 100 Rand, and we sell it for 80 Rand, you know, that 20 Rand you are still liable for. That's the part that we can negotiate on with you, because it's far less than the 100 Rand that you would have owed. Mr.
Gaoaketse, we'll have to leave it at that for now, but very well explained there. You're still under contract. You'll still be liable for some of the money that cannot be recouped via auction.